A new era is upon us. Pulse has taken the world by storm as the leading Web3 social media. Beyond current features like casting, tipping, inscription trading, and earning, it's now elevating to the next level, on-chain.
Soil, a fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed by tangible, real-world assets.
The Credify testnet is live, so head on over to demo.credify.finance to see how you can effortlessly experiment with autonomous earning, NFT corporate.
Hello, guys. I hope everyone's doing all right. So, I hope you're enjoying your week. Everything has been doing fine. It has been interesting week for the markets. Bitcoin bouncing, gold going for new all-time highs. While this hasn't been any important high-impact news week, which is I think completely normal in my opinion, since we had a lot of high impact news in the previous weeks that basically set the tone for the rally we are seeing today on gold and the possible reversal that we are looking at Bitcoin at the moment. Okay, so it's completely normal in my opinion. But today, let's talk about how to use different time frames for different trading styles. All right. So the first thing to mention is that the time frame is irrelevant. What do I mean by that? The market is going to move. The price is the price. The price is, if you want to see how price actually moves, go to the order flow and look at the bid and the ask. Look at the market orders. Look at the liquidity. Look at the limit orders. Right? What is happening? How the orders are getting executed. So when we talk about candlesticks, which is a representation of price, right? Candlesticks is just another indicator to study price, because you can see price in different type of charts. You can see price in ticks, you can see price in candlesticks, you can see price in Renko charts. So this is just another representation of what price is doing. So if it's just another representation, I can trade on the 1 minute, I can trade on the 1 second, I can trade on the 7 minutes, 17 minutes, whatever time frame you are looking for. And at the end of the day, you are going to get your own conclusions, but the price is going to be the price, and the price is going to continue moving forward its direction that the price wants to go, where liquidity is, right? So it doesn't really matter the time frame. I'm telling you this because I use the 10-minute chart, the 10-hour chart, which are not common, because normally people use the 15-minute and the 4-hour or the 12-hour. But like I told you, it's irrelevant, right? It's irrelevant. I just like it better how I see price moving on those type of time intervals, right? It's what I've been used to, what I have been using. So that's how I'm going to start this live stream. All right, telling you that the time frame is irrelevant. What is important is the price movement, the direction, the trend. If you are mean reverting or if you are trend following, right? Your risk to reward and several other factors other than the configuration of the time that you are looking for to trade. Okay. Let me change this. All right, so you can have a full view. So let me share you just a quick chart on what time frames I'm using and for what. All right, so for swing trading and for intraday trading. Okay, there's difference, yes, because the time period that I'm going to hold my trades between these two different trading styles, it's different, right? For intraday trading, I'm hoping not to be able to hold a position for the next day, right? I'm closing all of my positions between the same day. For swing trading, I'm holding my position during the intra-week period or during several weeks or months, right? So it's different. So for the swing trading approach, what I personally use, all right, is, let me change this. All right, it's the weekly time frame I use for the macro volume levels, right? Support and resistance. That's how I use the weekly. Okay, that's all. That's all you gotta look. If you're using my strategy, that's all you gotta look on the weekly chart. You don't need to see anything else. All right. The daily is for the order flow, or you can call it trend as well, right? Order flow, where the orders are flowing, right? Where the trend is the trend is ranging, is it bullish, is it bearish, basically that. And also the daily is going to help us identify the intraday B levels. Okay, that's how you are going to use the daily. Then, and I suggest do not go above like 3 or 4 time frames to take decisions in the market. All right, if you use like 10 time frames just to trade on the 1 minute, I don't recommend that, because basically you are mixing a lot of trading styles in one, and you need to take into consideration which time frames are confluent with the amount of time you want to hold the trade, right? If you are trading the 1 minute chart and you are basing your trades on the weekly trend, is not the best idea, right? Even on the daily trend. Okay, so after that, what I use is the 10-hour chart. Okay, the 10-hour chart is going to give me the trigger, which in my case are my volume candles, right? What you want to see here is a bullish engulfing, a bearish engulfing, pin bar, inside bar breakout, doji breakout, whatever type of candle formation that that is showing a high relative volume and possibly absorption on the week. Okay, because you want to interact with these candles when price is interacting with the volume levels that you already draw on the daily and weekly chart. Okay, so there you have the trigger. Okay, the 10-hour is going to give us the trigger. Okay, and then for looking for the trade setup in itself, what I use is the 1-hour chart. Okay, and the 1 hour is going to help me identify patterns and entry points, right? Because I have the trigger on the 10-hour, I can just easily trade the 10-hour chart, right? But I want to narrow down my risk to reward. I want to zoom into the market to see where is going to be my best entry point in order to have the best risk to reward, to trade with the daily trend in order to look out for my weekly targets. That's how you swing trade, right? That's my patterns. Those are the entry points. Now, the indicators that I use independently for each time frame is up to you, right? If you are trading order flow kind of patterns, if you are trading high relative volume, if you are trading option market theory items like volume profile, market profile, relative volume, cumulative volume delta, etc., I suggest mixing all of those depending on the time frame. I don't suggest using the cumulative volume delta on the daily time frame, not even on the 10-hour, right? Even on the 1 hour is kind of messy. If you are going to use the cumulative delta, you want to use that on the 1 minute chart, 10-minute chart maximum, right? But for example, for volume profile, you can use volume profile on every single time frame, to be honest. What else? Trend following indicator, right? Like moving averages, BWAPs, rolling BWAPs, moving BWAPs, volume weighted moving average, whatever type of moving average that you want to use, it's up to you, right? And you can use them on every single time frame depending on the velocity of the time of the trend that you want to see. If you want to use a 21 moving average, a 55 moving average, a 100, 200 MA, right? That's up to you. Okay, so I'm not going to show you which indicators and how I use them on this live stream specifically, because what I want to show you is how you're going to be able to transform your trading style, okay, by just looking at the time frames that are up, that are confluent with the trading style you want to follow. Okay. If you guys have any questions, please just let me know on the chats. I will happily answer them during our stream. All right. So let's continue with the intraday trading. All right. For the intraday trading, you are either going to use the daily or the 10-hour chart for the intra-week bid levels, volume levels. That's all. Okay. You don't want to use those higher time frame charts for anything else on your intraday trading. Okay. Look for which is more confluent on which instrument. Okay, because the 10-hour on Bitcoin is not the same as the 10-hour on gold, especially because the 10-hour on Bitcoin is a bit more confluent since it's a 24-hour market, but on gold, which is a legacy market and has halvings and all of that stuff, is less confluent to use the 10-hour. So possibly you need to use the daily, right? Mix it up. Look for what is better for you. I normally use the 10-hour because I'm used to it, all right, and it gives me clearer levels for the intraday charts, right? The daily normally doesn't give us that, but you need to look for the instrument that you are trading, and depending on that, take the decisions that you want to use. All right, the volatility, the liquidity, and the volume on Bitcoin and gold are completely different, all right, and are uncorrelated assets. All right, so after that, I'm going to use the 1-hour chart. Okay, I'm going to use the 1-hour chart for order flow and for the intraday bid levels. Okay, here I was mistaken. This is not intraday, this is intra-week volume levels. All right, then I'm using the 10-minute chart to look for the trigger, which are my volume candles, high relative volume candles, highlighting absorption, or that are bullish engulfings, pin bars, the most common candle formations that you can use, right? Don't go and look for a special candle that doesn't mean anything. Look for the most common ones, the ones that are going to make people follow such trend, right? 10 minutes. And then after that, I'm basically using the 1-minute chart for patterns and the entry points. Same criteria, right? It's exactly the same for both, for swing trading and intraday trading. The only difference are the timeframes that are using. Like I told you, if I'm looking for patterns and on entry points on the 1-minute chart, it's not going to be useful for me to follow the daily or the weekly trend, right? But it is going to be useful for me to follow the hourly trend, because since I'm trading intraday, I'm looking to close this position. If I open this position on the New York trading session, I'm looking out to close it at the end of the New York trading session. Or if I want to hold it a bit more until the Asian session, then I'm closing it before I go to sleep, right? Because the next trading day is going to possibly give me another opportunity that I don't want to miss, and I don't want to sleep on that trade because of the implied volatility that the intraday chart has, right? I can sleep on a swing trade. I can do it because I'm looking for the macro picture. So if I see a 5% move on Bitcoin that is possibly normal in a day, right? Or a 10% move on Bitcoin normal in a day, I'm not going to care about that move on my swing trade, right? It's just going to be a pullback. It can be just a pullback, right? But on the intraday chart, I can trade that pullback, but that pullback is not going to survive that long, right? So I'm going to get in and get out as soon as I can. All right. So I'm going to put the examples right now, the intraday trading and the swing trading with gold, right? I'm going to look through over the charts and the timeframes that I just showed you to show you how I'm going to analyze the charts, especially on gold, since it's doing an all-time high and following a projection that I recently and previously have been sharing with you guys over the past few weeks. All right. Okay, give me a second. Let me know if the stream is doing all right, if you can hear me well. You can put it on the chat so we can continue. Right. So guys, don't forget to join the Bird Nest. Okay, just scan this QR code with your cell phone, join, and you're going to have a lot of this educational material on a daily basis, basically, because we are several analysts, top class analysts, that are going to share with you our trading styles, our trading strategy, just for a nickel of its cuts, right? And you're going to have different trading styles to follow along, and you're going to have a community that is going to support you on your trading journey, which is one of the most amazing things that you can have if you are a trader and you are starting in this business, or you are already a couple years but you are on your own. Believe me that having people that supports you is going to forever change the way you trade and the way you approach the markets. All right, so let's continue. Let's go into the charts. Let me erase this and then let's start. Okay, so let's start top down, right? Let's go to our gold macro. Okay, different time frames. As you can see, gold has made a new all-time high. Interesting. So let's go to the weekly chart. Remember, I'm going to for what I'm going to use the weekly chart. It's just for the weekly volume levels, right? So I have my range formation over here, which Bitcoin is actually breaking out right now. I have this. Remember that my volume levels are confluent with liquidity gaps and order flow patterns, such as two candle closures on the same price, right? Openings and closures on the same price are extremely magnets for the market. So that's how I basically draw my levels. Okay, so these are going to be my weekly levels that I want to draw. We don't have no history above these levels. So what you are going to do, you have two options. Okay, you have two options if you want to see the next possible targets. What I would love to for you to start using is to make a fifth extension of the value area that you are already trading in between. Okay, so how do you do that? It's basically, just let me put this on. Yeah, this is a daily zone. All right. How you do this, you just basically draw a fifth extension in between the last B level you had and the two B levels that are near to each other, and you put a B levels extension. All right. So as you can see right now, we are heading basically towards this extension of the fifth. It's 24.96, and above it we have another extension of fifth, which is 26.22. All right, and you can draw all the way up, but I'm only interested on the two above us. Okay, if you are fond of trend lines, we can clearly see how gold is possibly finding resistance on this level over here. Okay, because of this trend line formation, that it's pretty clear that it might find resistance at 24.96 volume level, which is confluent with the trend line, right? So that's how you start building your own conclusions. This is a nice target because it's going to interact with this trend line, and it's going to interact with this weekly level, which is the target of such breakout of this range formation. the first target, right? If it breaks above the trend line, then you can expect moving towards 26, 22, and so on. All right. We also have kind of a trend line over here. Okay, so that's basically the consolidation that we have had on gold over the past few months. That's the consolidation. When the market is consolidating, you have patterns, and you can trade those patterns. Right now, this pattern hasn't break out yet, but the value area has already break out. Actually, yesterday after an inside buy breakout on the daily chart, which was interesting to trade on. All right, so that's our weekly targets, weekly levels align with the daily chart. Now, what we are looking for is for the intraday, intra-week volume levels that we are going to find them on the daily chart. Okay, so how we find them on the daily chart is basically just by, let me second over here. Okay, just look for the low volume nodes. Look for the low volume nodes on liquidity gaps and candle closures patterns that are confluent with the order flow, right? So we have one here, low volume node. It's kind of a zone over here. It's a liquidity gap on the daily chart. We have another one over here. Then we possibly we have this one, which is the most recent one. This is a liquidity gap in between these two candles over here, which is also aligned with the weekly volume level. We don't have anything above that. Okay, so other than the previous all-time high. But I don't like to trace volume levels in confluence with candle wicks. All right. Yeah, there might be some liquidity over here, but it's not useful for my trading style. Have that level over there. We can possibly draw this one, which is other liquidity gap, or the flow candles over here, possibly a zone. Yep, zone over there. And those are the intraday levels that we're looking for right now. Okay, so what I'm going to do is put them on the 10-hour and 1-hour chart. Okay, because I need to see the confluences that are building behind these movements. Okay, we have a zone over here. This is an hourly zone. And we have another zone over here. So the daily chart is bullish, right? The daily chart is bullish right now. How do I follow the trend? Rolling VWAP. The rolling VWAP price is above the rolling VWAP and it's telling me it's bullish. So I look for longs on the intra-week chart, on the swing charts, right? How do I look for longs? I don't like to trade breakouts. I'm not going to long resistance, right? But I would love to see a pullback towards this level and then a continuation to the upside, right? And then I'm going to get in here. That's why I don't care if the price continue to go to the upside and I don't know the targets that I'm looking out for, right? I don't know the targets right now. I don't have history about these levels. Okay, so that's why I'm looking for a pullback there and looking for a long. If I have in the future a pullback, right, into this zone, I'm going to go into the hourly chart, right? Look for a pattern. Which patterns do I trade? I trade over and under pattern, right? My entries here. I trade, let's say, for example, since we are on a support level trying to build this, I trade the FTR pattern, right? This is the FTR pattern. My entry is going to be here after these cells that happen on natural resistance level. And I'm also trading, right? So you have a drop, then a V-shaped recovery, consolidation, and continuation to the upside, right? That's how we trade the V-shape. So these are the three main patterns that I like to trade. Why I like to trade these patterns? Because after a V-shape, after an FTR, or after, and over and under, you have liquidity taken before the move. And place your stop losses below the previous level of liquidations that the market is most likely to not come back to that level. All right, so that's why I'm looking for those patterns to happen. But which is the trigger? So basically what I would like to see is on the 10-hour chart is a bullish engulfing, a pin bar, an inside bar breakout, doji breakout with, remember guys, the important thing, high relative volume, right? All of these candles need to be high relative volume, interacting with 2419.8 or 0.9, whatever, right? So as soon as I have that, I can go into the hourly chart knowing that my daily trend is bullish. I'm looking for longs, I'm looking for the patterns, and I'm looking for my entry point to diminish our risk to reward and expand our move in the market, right? That's how you use time frames in your advantage, right? The less time frame you use, you're just zooming in into the price movement. If I go to the 1 second, I'm zooming in. I'm zooming in as more as I can into the market movements, right? And below like 1 second, there's like one tick, right? If I use one tick chart, is every time there's a transaction in the market. If you're trading on the futures market, you're going to have a candle. Imagine that, right? Every single transaction that is happening on the market on every single millisecond is going to be a candle. So if you use a 1 hour chart, then you are looking more. If you're using the second chart, you are looking into more micro. If you are going above those time frames, you are looking on the macro. So basically, that's why I look into lower time frames for my swing trading to enter the market the best way I can. Okay, looking for the best risk to reward, at least something above 1.5 or 2 to 1, right? It would be awesome to have always trades above 2 to 1. Okay, because the longer, the higher the risk to reward for your trades, the lower your win rate needs to be, right? If you have higher risk to reward trades, the lower win rate you need to have. If you are looking for 2 to 1 trades, then your win rate needs to be 50% of the trades that you take. You need to win them in order to be on break even, right? So if you want to be profitable, you have to be above 55%, 60% win rate, which is very high, right? But if you're looking to take trades above 2.5, 3 to 1, 4 to 1, I'm not saying 10 to 1, 31 to 1, like 50 to 1, because those are kind of unreal risk to rewards unless you are I don't know, like I know some strategies that do so, like SMT or ICT, whatever. I don't trade that, but I don't. If it's funny because if you see the overall win rate of the people that is trading this kind of risk to reward, their average risk to reward of 100 trades that they take is going to be 2 to 1 or 3 to 1, because yeah, they're looking for 10 to 1 trades, 20 to 1 trades, but they are most likely to lose like 9 out of 10 trades and then make all of the losses on one trade and going to be profitable. Yeah, but you have to have the psychology enough, good enough psychology to hold over a 9 trade loss, right? And if you are swing trading, that means that possibly you are taking 1 trade per week or 2 trades per month, right? So that means that you lost basically 80% of the time on a year basis. Okay, so choose your heart. Choose your heart. If the average of these people that are looking for 10 to 1 trades or 20 to 1 trades is still 2 to 1 risk to reward, 3 to 1 risk to reward, why the hell you want to go and look for the best sniper point to entry where that's not necessary, where you can look for normal 2 to 1, 3 to 1 risk to reward trades, have the same win rate, have higher win rate than the other traders that are looking for higher risk to rewards, and live more peacefully. Right, if you know what I mean. All right, so yeah, that would be for gold. on the swing chart. Let's go and take a look. Yeah, that would be for gold on the swing chart. I don't have anything else. The daily chart is not giving me anything else at the moment. Okay. Yeah, nothing else. Just waiting for the pullback if I want to swing trade this. Otherwise, I just basically, if you wanted to long gold, you for a long position, you would have taken the position over here. All right. That's what we did on the birth nest. If you're on the birth nest, we longed this movement over here towards the weekly resistance over here. We recently closed the trade actually. All right. Yeah, possibly gold is going higher, but I want to see a pullback, even if it's small, but I want to see a pullback. All right. Now we are going to look for the intraday picture on gold. Let's take a look at the intraday picture. All right. Remember, guys, which time frame do I'm using for the intraday B levels? 10 hour. All right. So I'm going to the 10-hour chart and start looking for just B levels. I don't care about the trend. I don't care about anything else about what is happening on the 10-hour chart. Okay. So liquidity gap over here, first level, liquidity gap over here. We have a zone. We have a zone over here that we need to take into consideration. I'm looking forward to this. Yeah, something like that. Order flow candles. Another liquidity gap. A more queen. Yeah, you just need to look for the liquidity gaps and order flow candles that are confluent with the low volume nodes. As you can see, this line over here that I traded is more aligned with the high volume node, so that's why I'm erasing it, right? So those are the levels that are important to me at the moment. Since I'm trading the intraday chart, I'm not expecting that in one day gold is going to retrace what it took a month to build, right? It can happen on a swing trade perspective, but not on an intraday, right? So you need to be realistic. You need to be realistic with what you are looking for. Okay, so these levels are for the intraday. Oh no, sorry. These are intra-week volume levels. All right. So remember, the 10-hour is just showing me the volume levels. Now I'm heading to my bias chart, which is the hourly chart for the intraday trades. We have a zone over here. This is a 1 hour zone. Hourly zone. Yeah, hour. Okay, perfect. Okay, what's the trend? It's bullish. Rolling VWAP showing me bullish trend. You don't want to long here, right? Even though if it continues to the upside, gold might turn parabolic. I don't know, right? But you essentially don't want to long here. You want to wait to a retracement towards this level and look to long. Okay, now I'm going to look out for the intraday volume levels. Okay, so we have zone over here. Then we can use this order flow over here, top and bottom of this order flow levels. We have another liquidity gap over here. All right. And yeah, those are the levels that I'm looking for out. These are better to trace. This kind of levels is always better to trace them on before the New York trade session right now. Okay, but since we are doing this on the daily closure, it's completely fine to do so. So these are the intraday volume levels. If I go to the 10-minute chart, we are going to have a zone over here. We are also going to have a zone over here. So now you're going to see an indicator that I'm using for the intraday charts, which is the volume zone. I call it the volume zone, but basically it's just the most volatility coming from the New York trading session. So as you can see, for me, UTC -5, it's from 8 a.m. to 12 a.m. 4 hours of high volatility normally coming into the markets during the New York trading session, which is the only trading session that I'm going to trade for the intraday trades. Okay. You don't want to long here, essentially, right? You don't want to do that, because if you want to long, then you just wait for a pullback tomorrow in your trading session, take these lows, right? Take these lows, build a high relative volume candle here. If you see a high relative volume candle here, you are going to go towards the 1 minute chart, and you're going to start to look out for which patterns, over and under, right? FTR pattern, or or V shape. Okay, after you have the 10-minute confirmation of a high relative volume during the New York trading session window. Okay, easy as that. Same procedures, same type of criteria as the swing trading, but set your expectations, right? If you're going to trade, though, why do I do this? Because this way I can hedge myself, right? If I have been long, okay, if I have been long, for example, if I have been long since here on the swing chart, right? If I have been long, it doesn't matter. I can easily short hedge this movement on my intraday charts, without the need of following the weekly or the daily trend, right? Because I have a trade open, a long position open on the hourly chart and the 10-hour chart, but I can easily take intraday trades during the New York trading session that can hedge my position, making some shorts on those pullbacks, if you know what I mean. All right. So that's how I do it, and that's why I do it. That's how I mix the time frames. That's how you can do it. It's really easy to just have you set your expectations. Don't expect that a swing trade is going to fulfill your take profit in one day, and as well, don't hold your intraday trade for more than one day. That's all. All right. Set your expectations for the different trading styles, or choose one. All right. If you're a very busy person, then just swing trade. If you want to dedicate your whole time to markets, because that's how it works. I'm not saying that you're going to look to the charts 24/7, but intraday trading is going to require more presence from you and more concentration, right? Because everything happens in seconds and in 5 minutes. Okay, so I think that would be all for today, guys. I hope you enjoyed this trading session and that it was useful. Okay. If you want to ask me something, you can DM me on my Twitter, Baslavs, or you can join the Bird Nest and DM me on the Discord, on the private Discord. If you want to know further about the methodology on how I trade and why I trade this, just let me know. I'm eager and happy to help you on your journey. All right. So have a good one, guys.